My name is Jobst von Hoyningen-Huene. I'm co-CEO and co-founder of Econnext. We are a climate tech holding with a focus on decarbonization and circular economy. I don't have to explain to you in that room, these two graphs here, but three messages to convey. Climate tech is not a trend that will go away. You actually bet as a climate tech investor on a lasting development. Secondly, the ambition level is super high. We all know what we have to do and that we have to do it fast. And then third message, we need negative emissions. So we need carbon removal big time in order to succeed with the goals. However, having said that, I believe that we as society have not understood well the size of the challenge. And also we do not understand what scope is needed to actually do the change and do the transition. But most importantly, my opinion is that investors have not understood the attractivity of the opportunity and the need to do something on the one hand side, the possibility to invest in future industrial leaders that have high market shares and currently at very moderate valuation levels. As Econnext, those are the markets that we like. All of them are new markets, still niche, but growing fast, and there's strong dynamic. Building integrated photovoltaics, bidirectional charging, carbon removal based on nature-based solutions, electrification of heat, utility thermal storage, recycling of PV, and decarbonization as a service. All these new markets will be dominated by future industrial leaders. What do I mean with future industrial leader? Future industrial leaders are different to the unicorns and software and digital-driven companies that we have in mind and that have grown and dominated the markets over the last 20, 25 years. Future industrial leaders are not capital light. They focus on hardware. Hardware is key for them. They need to do R&D, they need to do demos, they need to do pilot plants. Everything is capital intense. In the proof phase, they need to build sizable first-of-a-kind projects, again, capital intense. But as a future industrial leader, they are able to deliver large projects, predictable, stable cash flows, based on reliable strategic cooperations with multinationals and great counterparties. So what is the problem and what is the issue? I think the R&D pilot and demo phase, this is well covered and sorted also in Europe. We have venture capital and venture capitalists looking at that space. What is more difficult is the next phase, the scaling phase, when first-of-a-kind projects need to be delivered, need to be capitalized. Those are not bankable at that point in time. You need to create teams and expertise. And this is where the issue starts. And if I listen to a couple of the companies that have presented yesterday and today, for them this is the issue. Having said that, in the next phase, those future industrial leaders are able to deliver these big scale, highly attractive, predictable cash flow projects, which are of interest to infrastructure investors. And my thesis is that private equity for the difficult phase is not the right investor because they cannot invest in loss-making companies. But infrastructure investors, they hold basically the key and they can unlock it if they want to, or if they are actually able to invest in the corporate funding of these future industrial leaders in that very difficult phase, because by doing that, they secure access to that pipeline. I'll give you an example from our portfolio. Circular Carbon is our subsidiary. Those are pictures from the site in Hamburg. They run the largest biochar production site based on biomass waste in Europe. So they have a long-term contract and relationship with an industrial player. They use biomass waste, cocoa husks. They can produce green steam and replace natural gas, which they deliver to the partner. They produce biochar, a couple of thousand tons per annum. And by doing that, because this is a nature-based solutions, and deployed in soil, they can actually create carbon credits big time. So wonderful opportunity. They have proven that. This site is running. Everything is happy, but now the problem starts because the rumors go around and people start and potential partners start to call and want to have the same. And this is just a picture, of the European pipeline, which is currently 40 times bigger than the site in Hamburg. So really leapfrogging, and you need to invest in the company. So of course, infrastructure investors are extremely attracted by these assets, by the projects. But what need to be done is really investing in a team, investing in hardware, in testing, in actually CapEx and working capital, pre-financing, in order to be able to unlock that project size. But what you see is actually stable cash flows and projects that are highly, highly interesting for infrastructure investors. What do I want to convey here, and what are the messages to take home? So there will be new markets, primarily hardware-driven, in my opinion. They will be dominated by future industrial leaders. Those future industrial leaders are different. They have different KPIs. They are not software companies. And those future industrial leaders need different investors. And on the other hand, if you are an infrastructure investor and if you are actually seeing that opportunity, now is the time, because the valuation levels are extremely attractive for incoming investors. If you want to raise a fund, climate tech fund, I think this is the opportunity. Go raise 1-2 billions, because there's literally no competition and opportunities are widespread. So if you talk to infrastructure investors, convey that message, explain the story, and actually if you have found one, connect them to me, because we actually are extremely interested to build these future industrial leaders. We have a couple of them. That was just one example, and we believe that we can build them with the like-minded investors. So no time to lose. Many thanks, and I think the coffee and the drinks are ready for the break. Thank you.
Thanks.